Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We start out the show like we usually do, looking at the German DAX and the FTSE. I think those tell you they've had some really strong moves up. We backed off a little bit. Very little repercussions from the thing going on in China with Apple. The Apple went from 328 down to what, 310. It's rallied up to 318, 319 already this morning. So no one's really paying, a whole lot of attention to that as we look at these things here early this morning. Boys and girls, this is a wonderful way to start the week, and I'll tell you why. At 9:30, we are going to have Tom Hugard come on and explain to him. Let's try it the other way, Larry. He's going to show us what he did during the last time he had one of these huge, super life-changing moves, and he's going to show you why he did it, and he's going to show you what we're looking at now, sort of like deja vu, and I really think you're going to like it. He's forwarded me 9 incredibly informative charts, and I think that they look very, very interesting, to say the least. Now, there's another one here that I would like to show you right now. Oh, you know what I've got to do? I've got to do something really quick, otherwise I'm in big trouble. Hold on a second. I have to save it, and now I'll move it over here, and we'll get it up here so you can see it. This comes from our good friend Shane Smolian, the Wolf Trader. We've been watching this exponential thing with this disease thing with the virus. Here is where we are right now. You'll see we had that expansion there last week when they changed the reporting, but you notice here that we're still moving up towards, it looks like we're going to be at about 120,000 1 week from now. Folks, we were down here below 1,000 just a while ago, back there in January the 23rd, and now we're almost at 100,000. The problem is that the stock market should probably be down 2,000 points given that, but it's not. So I wonder how much of this is fake news or what. I really don't know. We have family there, and we hear how bad it is, and then you see the news and you don't see anything nearly as bad. So it's really a quagmire. So trade what you see and not what you think. That's basically all I can tell you. Now, pre-market last night, we had a real interesting situation here. Those of you that like Fibonacci levels, I'll get this up here and show you. We hit. I know it seems hard to believe, folks. This is an $800 and some stock. But did you know that to the exact 2 cents, the Tesla hit the exact 61% retracement and has dropped $22 in the last 20 minutes. Now, I know sometimes these Fibonacci numbers don't work, but when you see them work like that, really has to open your eyes. So we'll see. I don't know, but all I know is that these things, if half of these things are true, what's going on in China, this is not good for stocks, folks. I mean, they're cutting out supply. Look at Apple's already said they're going to have trouble meeting their quotas. I don't know, but I don't trust the news. That's all I can tell you. That's basically the bottom line. One thing I did do that I think was relatively smart to do, and that was last night, yesterday morning when the holiday was on, we were trading a course, and I sent out this pattern to the folks at the 24/7 and to be able to see that we had this beautiful 135 pattern in the Dow Jones Industrial Average. Remember, the NASDAQ had already made new highs Sunday night, and then the Dow was much, much weaker. You can see the beautiful symmetry here. This is an hourly chart. Took 4 days to complete, and now we've gone down and we've taken out those lows at that 92 something level. We're trading around 93.20 something like that right now. So anything above that would tell you it would be more bullish, but we'll see how these things unfold as we look at them. The bonds had a nice run up to that 163 level and have now backed off a little bit. Folks, these markets are not telling us it's the end of the world. That's basically, and maybe there's a reason for that. I don't know, but if it were really something crazy, then I think you'd see more. People compare it, and I don't know if they can do this or not. They can compare it to the 1918 Spanish flu that killed 50 million people, and that's when 50 million people was a lot of people. The U.S. casualty rate of deaths was 687,000 out of a population of 108 million, and now we're 383 million now. So it's something to pay attention to. The problem is, folks, what comes out of that, you just can't trust the news. That's basically all I can tell you. That's all I can tell you. That's nothing else. All right, let's move on to the next one that I wanted to mention to you. And that is, remember, folks, we were talking about the dollar index the last few weeks, getting ready to see the dollar index, move up to its price objective that we've been waiting for, and we have hit that. We're a tad above it right now as oh dear, what happened to the chart? Shut the front door and raise the rent. Here it is, right there in front of me. There we go. Get this dollar index chart up. You'll be able to see it right here. We've already exceeded it. Now, folks, we have almost taken out the highs of August. We should be there very, very closely. And the euro, folks, the opposite of this. This is the inverse because it's 53% of the index, and the euro it's really oversold. So I'm looking around for a bottom down here at this 107.80 to see some type of a bounce. We're down like 15 or 16 days in a row, and it's been just dropping and dropping and dropping, and that's the main thing that you'll be looking at as you watch some of these things. They'll just do one after another. Now it's really, you want to see something really surprising, been dropping in the euro. Just look at this. Those of you that like Fibonacci numbers, going back to February the 7th, look at this. Each of the rallies was 382 of the previous rally. Each one of them, all five. I mean, the market repeats over and over again. So try to remember and look at that. You don't have to watch what the news is doing. That's neither here nor there. We'll see whether that's going to be the case or not. But remember, the Fed is in there pumping all the time, so they can move the market very, very quickly. And so always protect yourself with stops. You certainly need to do that. Other one, boys and girls, we have hit the magic number in the gold. If you remember, we've been talking about this here for about many moons now, and it looks like we hit that 1395 in the gold just a little while ago. That's the key level that we've been keeping a very, very close eye on, and it looks like we've hit there, and there's no question that we've hit there. So we really need to pay attention to it because we have gone above an area where it could easily start to accelerate from here. If you look at your 30-minute charts, now this is a daily chart, but if you look at the 30-minute chart, you'll see that the ABCD on that 30-minute chart comes in at 1595, and if we clear that, and we got there so far, we're going to see. We're at 1596 now, and we're getting close. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I just want to let you know, I just can't tell you how excited I am to have Tom on today because he's prepared 9 really incredible charts. It's going to be a tremendous lesson to get inside the mind of a super trader, and he's going to show you what he's doing right now. So I think you're going to really like this. It'll be really exciting for us to watch. I wanted to spend just a moment here just to take a quick look here. I get asked all the time about the open interest, and the open interest in all of the stock indices dropped on last Thursday and Friday, but let me get this up here so you can show you how to do it yourself. All you have to do is to do this. You go to the CME.com website. You click that red data. I put the arrow in so you can see it, the red data, okay? Then go down to equities and then go down, scroll down to the one, this happens to be the E-mini Russell, which is the second largest after the S&P. You'll see the open interest drop 2,200. Just go down, check them all. NASDAQ, S&P, Russell, and Dow Jones, you'll have them all there. And you'll be able to see. And then with the open interest drops and price rise, that means that the market is weakening. That's all you have to do. It's very, very simple. I watch it whenever the market's making new highs or new lows with a big thing, and so we'll be able to see that. That could, yes, Marshall is correct. That could be a double top on the U.S. dollar index for sure, but I wanted to bring this to your attention here. Here is the euro that I was talking about just a while ago while we were on the air. The beeper just went off at the 1.27 level at 107.84, and now. That's, you know, look how many days, folks. We've been down 14 days since February 3rd. We've been down, so that's 2 solid weeks every single day. And I just showed you the euro chart that it was dropping. It did it again last night. Did the same thing, made a 382 retracement and then dropped again. So one of these times it's going to have a pop. Now, in order to see the euro move, the biggest rally we've had so far has been 40 pips over the last 2 weeks, believe it or not. That's, it just seems impossible, but that's what it's been. And those are part of the market statistics that you should really keep in mind of what the market's doing, because it repeats over and over and over until it stops repeating, and then it goes into a new cycle. And so those are some of the things you want to think about when you're watching these markets today. So let's move on. To one other thing that I wanted to mention here, and I'm just really excited about Tom coming on in 9 minutes. Here's one that's really interesting, folks. I want to show you. This is the just to show you how markets, how they change a little bit. Okay. Oh, yes, we're going to talk about the natural gas, Bob. You betcha. Hold on. That'll be next. You'll notice here this euro, this is a cross rate, one of the larger cross rates, euro versus the British pound. That's the largest one in Europe, of course. You'll notice that we've got down here this daily chart. You can see the possible double bottom that you have there in the blue color. That's what we're kind of keeping an eye on. I don't trade this cross rate, but I am watching it very closely. But here's why it's so very important, folks. If you look at this cross rate on the weekly basis, you can see that if it fails there, look what's going to happen. It thing is going to really, really fall out of bed. So if it doesn't hold that 83 level, look out, because it could really easily go down. That's why when these patterns fail, they're telling you something, and that's what's very, very important. Now, on to the natural gas. Boys and girls, this one has started to move really good. It's up about 20 handles since we were looking at it down there. It held up relatively well. Let's get it up here so we can take a quick look at it here. And you can see when we get up here, we'll be able to show you the pattern, and you'll see it where we are. We went down to that, we hit the exact number. We went a few ticks below that 175, and now we're trading at 195. We've taken out the highs of the last several weeks, and we're almost approaching the gap at 2. So the thing that we really need to watch now in the natural gas, just like we did Friday, is watch the pullbacks. The first pullback we got was a 61% retracement. Remember, at 179. And that's when we raised our stop up to that level. And now what we're looking at is the market to possibly continue higher. So we want to watch the next correction. The last correction that we had was 8 cents. So watch an 8 cents correction. So there should be strong support at around 188 in this. So if that's correct, then we'll be able to see that. We'll be able to see that. It's going to be interesting to see whether it holds that level or not. Very interesting. I have not checked out silver. I don't know if silver has broken out to the upside or not. Did silver get above 18 cents yet today, folks? Could someone let me know that? Because I haven't seen silver this morning, and I don't know if silver got above that 18 cents, 17. It's got to get above 18 cents, and then I think it's got a chance. But this gold today at 195 is 1595 is very interesting. 195. My God, that's when I was first selling gold at Drexel. We were buying gold for the customers at under $200, and it was really exciting. Okay, so we did get above it. That's a good sign. So we'll see if that's going to keep on moving. As far as the other futures, we have not covered them too much, other than the wheat and a few of the others. But we're looking at more of those this week, because we've got a possibility that some bottoms are forming in corn, wheat, beans, oil, soybean oil, and stuff like that. That would be interesting. As far as the crude oil goes, last night we got up to 52.33. We backed off about $1 a barrel from that level. There's still strong resistance at that 53 level in the crude oil, but if we never get above that level, it will be quite interesting. By the way, 877-927-6648, and Tom will be on with us the whole half hour, the second half of the show, and so hopefully we'll be able to get some really good information from him on what we're watching with these markets today, because we're starting to see some great volatility. As we said from the beginning of January, this is going to be the year of volatility, and I don't think it's going to disappoint anybody. That's the way it looks like here from this level. So, one other question I wanted to bring to your, not a question, but a statement, is about the news that comes out of these different news services and stuff. Some of the stuff that you see on YouTube is just totally, absolutely ridiculous. So just because it's on YouTube, boy, don't think it's true, because people play games there just like they do everywhere else, and that's not what we want to. That's not what we want to go through. Now, what I'm going to do now is I'm going to post one of the charts that we're going to have from Trader Tom here in just a few minutes. And this is the market that I happen to be involved with him for quite a bit. We'll pull this up here. This is the 1997 to 2003. He's going to show you the relationships of what he was looking at that time and then bring them forward to where we are today. So stay tuned, folks. In 4 minutes, we're going to have the master himself, Tom Hugard. Trader Tom will be on talking to us about the situation that we have going in the markets right now. So let's sort of remind ourselves, don't miss it today. And if you have any questions, feel free to call in. He always likes to answer questions.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hugard on the line here today. Tom, how are you?
I'm good, thank you. How are you?
I'm very good. I have posted your chart number 1. You want to tell the folks the why we're doing this morning and the sequence of events, and we'll just, whenever you want me to move a chart, just tell me and I'll pull it up. So go right ahead, my friend.
Okay. The reason why I wanted to post this chart to your listeners was because I thought it was very time relevant. So if you're if your listeners are looking at chart number 1 now, there's a little bit of a story here. So you just cut me off when you have to go to a commercial break. But I wanted to ask the viewers, when they see these pointed arrows, they mark sometimes in the Dow Jones index history that is that's associated with an extreme emotional fear or extreme emotional greed. And what we're seeing at point 1 is the low of 1998 and then the high of 2000, which was the high for quite a number of years, I think until 2006. And then we have a secondary high in 2001, and then we have the bear market low in 2002. And then we have a double top at point number 5 on the 17th of February 2003. Now, all of these 5 points have something in common, and that's the question. So if you then go to chart number 2.
Okay. Just give me a second here. We have it up right now, and it is up.
Okay, so the difference between point number 1 and point number 2 was 72 weeks or 500 calendar days, plus minus a day or two on either side. And when I sat and looked at this in 2001, I was thinking, I wonder if this is just a coincidence, because at that point I only had point 1, point 2, and point 3 available to me. But I did some sort of just a little bit of abstract thinking, well, if there's 72 weeks from point 1 to point 2, and if there's 72 weeks from point 2 to point 3, and you'll be able to see that if you move on to chart number 3.
Okay. It's up.
Okay. So if you look at chart number 3, you will now see that between point 1 and point 2, there's 500 days. Between point 2 and point 3, there's 500 days. And you have to remember, I was sitting looking at this at some point in 2001, late 2001, thinking, I wonder if there's going to be a significant high or low 500 days ahead from point number 3. And that would have pointed to around the 9th to the 11th of October 2002. And so I took a shot at it because the market was declining very rapidly in late 2002, and I started buying shares for my pension, my portfolio. And the low came in pretty much on time. So now, of course, I was full of enthusiasm for this thing that I had discovered. So I at that point in time, I was often on Bloomberg and CNBC and CNN. So I marched on all the TV stations, a little bit youthful and full of exuberance, and I proclaimed that there was going to be a major top in the stock market around 0.5. I didn't say 0.5. I said I believe that the high is going to be on the 17th of February, 2003. And of course, 2004. And so, of course, when a guest comes on the air and is very specific about being a date, people pay attention to that. And that's kind of, I've never really disclosed to anyone how I did it. But as you can see, if you go to chart number 4.
Okay, here we go. This is incredibly interesting, Thomas. Go ahead.
Look, if someone goes on TV and says that they expect a turn at a certain date, you think, how on earth are they doing that? But as now I am revealing the truth, you can see that it isn't terribly complicated. So if you move on to chart number 5, now chart number 4 shows how I projected the turn on the 10th of October 2002, because this too was 72 weeks from point number 3. So while you go on to chart number 5, I can then perhaps talk very briefly about the significance of 72 weeks, which some people would argue would be half a Fibonacci cycle of 144 weeks.
Wow.
And then chart number 5 basically just shows that I added 500 days or 72 weeks from the low of the bear market in 2002. And while it doesn't look like much on the chart, that high that we made on the 17th of February actually held the market in keep for the next 8 to 9 months until it was surpassed in late October 2000 and 2003.
Wow.
2004. So if you then move on to chart number chart number 6, because then we're moving up towards something that I find incredibly interesting. From the low of 2002 up until the high in 2007, there weren't that many cycle turns, but there was one very interesting one, and that was the high. The high from the mid-2005 until the final bull market top in 2007 was also 72 weeks. But what I find incredibly interesting was the length of the bull market top to the bear market low in 2009. Guess how many weeks that was? And you get the answer if you press on to chart number 7.
Okay. I get the answer if I press on the chart number 7, and the answer is, boys and girls, as we open the envelope, 72 weeks.
Now, if you ask me why this happens, I can't answer that. But if you go on to chart number 8, I just want to very quickly show you the amount of times that it happened over the ensuing 7 years. And then if you then go to chart number 9, which is the last one, which is really the moral of the story. Okay, we got it up here. There we go. I'm no wise man. I'm no sage. I guess my strength lies in being able to observe. And I observed this. And the reason why I wanted your listeners to be aware of this phenomenon was because the last high that we had in 2018 is exactly 72 weeks this week in the Dow Jones Index. So the moral of the story, whether you use this or not, well, that is up to the individual. But I observed this in 2001, and I traded it in 2002 and 3, but especially in 2009, and I made a significant amount of return on my account. Now, I also, as I write, I admit there are times when this cycle seems to disappear, and I don't know why it does that. All I wanted you two and your listeners to be aware of, that this is what's happening right now, not after the fact. So now we can see how story unfolds. It may turn out to be a significant high. I may get this horribly wrong. Only time can tell.
What would be your indication that you were wrong, Tom?
The indication would be if we, after this week, continues above where we are right now, then from the prior observations where I have got it wrong, because there was a couple of times where I got it wrong. Of course, I didn't show you that, because then that would kind of steal a little bit of my thunder if I showed you where I was wrong. But the times that I have been wrong is if the market takes out the high, and in particular closes above the high that we saw last week.
Hey, listen, my friend, can you stay with us till the break? We have one question from one of our listeners. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. Tom, we have a question for one of our listeners. How do you go about deciding when the next low will be?
Okay, so when you're dealing with what I call leverage trading, which I am allowed to do here in Europe, I'm not so sure that you are allowed to do it to the same extent in the Americas. You obviously need to operate with some kind of stop loss. But if I was going to trade this particular cycle as I've shown it today, I would probably do it with options. I'm not an expert in options, so please don't ask me what strike price, etc. I would do. But if history is anything to go by, then we would expect at least a 3-month pullback in stock indices. Now, I find that a little difficult to imagine in an election year, because the election cycle tells us that election years tend to be strong. They're not always strong. Just look at 2008, but they tend to be strong. The alternative would be perhaps to pre-play it using an ETF. But timing-wise, that's the one problem that I have always had with this, is that I don't know if the cycle that I'm showing you here goes from high to high, or high to low, or low to high, or low to low even. Mm-hmm. It's very good at picking highs or lows, and it sure does seem like that this would be a great top in the market. It would timing-wise, February is not a bad month to make a top in the market. But as for what strike price I would trade, or how long this correction, if at all, it comes, I'm afraid that my crystal ball is out for repair. And what you've seen, what I've shown you today, is the extent of my crystal ball vision.
That's good enough. Your crystal ball is pretty good. Hey, thank you so much for these wonderful charts. And if someone requests them, is it okay if I send them out to the folks?
Yes, of course. Please do.
Okay, and we'll have you on. Yeah, we'll have you on again soon to get back to your trading, and hopefully we'll have you on very, very soon. Thank you, Tom, for being on.
Thank you, Larry.
You bet.
Bye-bye.
Trader Tom, folks, telegram.com if you want to go to watch him. But anyway, this is what we're looking at today. A lot of good charts. If you do want these charts, drop me an email and I'll post them for you at a good price. I will give them to you free today. Let's get back to a couple of things. One is that the euro has gone down and made the exact, to the tick, 1.27 expansion number, folks, at 107.82. We're now 15 pips higher than that. I happen to be in there nibbling at it at that point. I put my stop 2 pips below that now, so I'm only going to risk $20 on that trade. Here's one that's interesting, folks. It's telling you that it's not the end of the world. This is a market that is much, 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 much bigger than we have in the stock market, and that here is the bond market. As you look here this morning, we have a market that took out the highs of early February around the 10th, and look what we've done today. We've already dropped almost a full point. Yeah, we're right at there right now. We've dropped almost a full point. That's telling you that there's not any panic in the air. So that's the main thing that you want to keep in mind. That watch where the money's moving. Go back to Bernstein and Woodward. Follow the money. But that's what it looks like so far. So keep it. I hope you enjoyed Tom's presentation. I certainly did. I was with I've known him since '95. Yeah, 2003. I met him in 2003. So it's been that's a long time, 17 years. I first met him when he was at in London doing the show for Michael Spencer's City Index. He was on CNBC and Bloomberg, and I saw how good he was technically, so I made contact with him. He came out to visit me several times, and we became very good friends through the years and stuff. So it's been a great relationship. Okay, let's move on to one of. Oh, I got a sequel, folks. If you remember the question about the young man that made all the money. And he'd gone to about so much. He was up a couple 100,000. He was now up 50,000. That's now down to 25,000. He's still up 25,000. I told him to stop trading till he understands what he's doing, but he will not understand that until the old debit master knocks on the door or Papa pulls the plug or something like that. But I certainly hope that he doesn't give up, because anybody that can do that, they can come back. Because if you read Livermore's book, the one thing that he tells you is you can make these mistakes over and over again. And as soon as you stop making the same silly mistakes, the better off you're going to be. So remind yourself that that's a very, very important thing to look at. Dennis is telling us that we have an eclipse point tomorrow, February the 19th. The moon returns to the eclipse points where the 5 planets gathered in early January. That's the one that I was certainly interested in, January the 13th, through the 20th, and it certainly did that. Yes, that's life's battles don't always go to the stronger or faster man, but sooner or later, the one who wins is the one who thinks he can. And that's true, folks. Keep that in mind. All right, let's go on. We have a question about the gold market. We went to $15.96 and we stopped. We backed off $5 so far. I believe that's going to be the top in here, the gold, at least until we get above $15.96. The ABC structure on that was $15.95. We got to $15.96. That's pretty close. Whether that means anything or not, but keep an eye on this euro, folks. It's been down 14 days. It's what we call oversold, and I think that's a very interesting one to look at. Natural gas, we've already talked about what we're going to do there. What's the last price on the natural gas? Do we get above 198 level? If we get above 198 in the natural gas today, that's going to be a very, very powerful number, because there's a big gap at 2, and if we can pop through that, we've got a really good chance. But this could be a really big bottom here. Well, it's already a big bottom for stuff. So 17.95 half. So no, we need natural gas to get above 2, and this is only the third day up. So who knows where it's going to go? But it trapped a lot of people down there that was looking at this stuff, and so we'll see how this thing unfolds. So watch it very, very closely. Okay, what other thing do we have here is to move on to a couple of things. I've already covered that, and that. That's it. Well, we're at the moment of truth here in the euro, the dollar index, and the British pound is another interesting one. The British pound is very, very interesting. We held that major support down there. We had a beautiful pattern in the British pound. Let's get just to show you what it was here so you can see where we were here. If I can find it, and I did. Here it is. I hope this is it. Nope, that's not it. Boy, these charts, I'll tell you, folks, I'm getting to the point where I'm getting a little afraid to post them because I can't find them when I need to find them, and that makes it a little difficult here. All right. Oh, one other question. Someone's bailed me out here about the corn. I think the corn has held that level we were looking at 377. No question about it. Whether these things get moving or not, I don't know, but it's really holding. It's got a real chance in here. I don't know. China has to buy food. I mean, they just can't shut everything down over there. So, and who knows what's going on. The other one, it looks really good. The coffee bottomed, down there at that level. We got up to that 103, 105 level. Now, last time I checked the coffee, it was moving pretty good for those of you that follow the coffee. The sugar, if you remember, the sugar was forming that big top up there. We had a pretty big break in the sugar from that top, well over a penny a pound so far. And that's going to be another one that's going to be sort of interesting. I'll get this up here, and you'll be able to see here it is in the sugar. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. I wanted to bring to your attention one chart that I think is very important for all of us to remember. Let's get this up here and take a look at it. Here is the chart of the Dow Jones Industrial Average. And those of you that was just looking at Tom's program, you'll remember that it made that 3 drive to a top pattern, just like it did in 1997 and again in 2007. So it's very interesting that pattern was happening at that same same time. But that 72-week cycle certainly must mean something. And the best part of it is if it doesn't work, you're going to be in new high ground very quickly, and you'll know that it doesn't work because it is accurate within a few days, and that was this last week. So that should have been it if it is the case. So you know what your line in the sand is, so to speak. Just keep that in mind. Remember the euro, very, very oversold, down 14 days, stopped exactly at the 1.27 level today. Might last about 10 minutes, might last 2 hours, who knows. But we're getting near a place where the euro's about to have a little bit of a bounce. We're at a double top in the dollar index, as Marshall pointed out to us this morning. So we pay very, very close attention to that. That's a real interesting one, to watch extremely closely here. So there's a lot of things watching, especially the gold here. We close above 1596, folks. Gold is off to the races. Probably going to pull silver and platinum along with it. But we've got to get above that coveted level, and then we've got a chance to really move. The reason why it's so important is the fact that just check your chart. You'll see it's the ABCD pattern on the 1-hour chart. Just absolutely is perfectly symmetrical as you possibly can. Now, the main thing is, folks, live every day in an attitude of gratitude, and may God bless, and do something good for someone that doesn't have as much as you. And there's a lot of those folks out there. See you on the flip side tomorrow, boys and girls.